Hello. It's obviously been a long time, but let's get straight into it. Obviously, week 8, chapter 8. Okay. It's chapter 8 now. Let's jump right in. So, we're going to be going over this. I believe it's AU. I'm pretty sure. We're going to be obviously going over the Litiverse stuff. So, what is the first step? As always, we have. There we go. We have our H1 identification. It assists with obviously understanding which inducement you're trading away from, where your major levels, obviously your points of interest and your stuff like this. So the chart beforehand was obviously H1. So just looking at this, we can obviously see a couple of things. We can see, okay, yeah. Okay, we see all of this, but let's go into the next slide and we can dig into that a little bit more. So, what do we have? Just based on the H1, we have this juicy, boom, 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 and then obviously we'll be doing this day here. So, okay, we understand what's going on. Yeah, looks pretty good to me. We've got 1, 2, 3, 4, 5, 6 touches of this support or equal lows or whatever you call it. But let's go through this. So first off, we build this trend to the upside. We bring in all these buyers, break out. They're all getting excited. Break out. Then what? Okay, we start to build this overall resistance zone. Push price lower. What does this do? This is the point where they get it. And they're getting excited. Oh my god, vectors. Getting really excited. We take out some of these guys, and then we have our next little push higher, taking out all of the SLs from up here. All of them. So these guys are out. They all thought like, oh yeah, we're selling. That's our premature sellers. The buyers have been brought in throughout this push. Some of them got taken out here, but obviously some of them are still in. And then we have this final push high. So now all the buyers are convinced, okay, we're going up. There's nothing stopping us. Let's get it. The sellers have already been taken out, our premature sellers. So perfect. Everything is looking very nice. Vectors as we like to see. Then we follow price down. Okay, perfect. We have obviously to push lower. Takes this liquidity, which is why we trade away. But obviously, once we begin to trade away, we understand, okay, this is still pretty equal lowy. We've now got like an overall support level here. So this could potentially become the target. Then we pull back to where? Here. And then we went one final push lower. So at this point, you've got to think, everyone's thinking, okay, lower. We want price to go lower. We're following the momentum. We're following the breaks of structure. Price is now going to go lower. So what do? Well, first, we build this little mini buy trend, getting people excited. Wow, this looks pretty familiar. We've had something like this over here. And then obviously we pull back to this. Now, why is this pullback to this level important, because what happens when we make that new low? Now, this is the confirmation for the sellers. So some of the buyers, they're obviously in up here. Sellers push in. You've got your breakout traders getting in. You've got your break and retest traders getting in. You've got your overall resistance traders getting in. They're all getting excited. So they're like, okay, makes a lot of sense. They're jumping in. Where are their SLs? Right above the reaction. So similar to what happened up here, false break structure, push to the downside, and then what? We know that we've got some people selling here, and in the ideal scenario, we take them out. So that's exactly what happens. Pulls back, takes them out. Now, we've had very similar situation to up here. We've had our premature sellers being taken out. We've got a very obvious target. So, from there, what should ideally happen? Boom. Okay, so that makes a lot of sense. We can understand that. Higher time frame is pretty clean. We can understand that overall, the higher time frame is definitely telling us to sell. Perfect. So let's jump into the intraday. We obviously start. Oh, let me get rid of that for you. Sorry. We obviously start off with M5 Asia range identification. Here we want to identify more precise areas of liquidity, build-ups, and potential liquidity runs. So let's have a little look. These are a couple of things that it could look like. We've obviously seen this. We're used to this by now in chapter 8. Seen this probably thousands of times. Okay, again, perfect. Let's get to the charts. So just coming off of the intraday. Now first, sorry, let me just go back to a higher time frame. Just bear with me. So here we understand that, okay, higher time frame, we're wanting to sell. Perfect. But just because you're wanting to sell on the higher time frame doesn't necessarily mean that intraday is going to dictate the same thing. So we want to also align our higher time frame with intraday. So let's look at what intraday is telling us. So first off, okay, beautiful. That's not the best line. Forgive me. No, we can draw better than that. Boom. Okay, perfect. So people getting interested. Lovely little build up into inducement low. Here you've obviously got breakout jumping in here, breakout and break and retest jumping in there, breakout and break and retest jumping in there. So, okay, we get the idea. Lots of buyers. Perfect. And then what do we see? Okay, so even on intraday, we've built these equal lows. We're trading away. We know that they're all in once they get that structure confirmation. And then same thing again. What do we have here? Breakout getting interested, breakout and break and retest getting interested. So perfect. Now let's zoom out a little bit and try and understand. So here, this obviously lies on equal lows. And then we've got two zones above it, which are all possible. Nothing to take limits off, of course, because you're not just going to randomly set your limit here and be like, oh yeah, of course, that makes loads of sense. You want your confirmations. And even then with your confirmations, you probably don't trade limit off this zone or this zone. You would want to trade the reaction after your confirmations. So let's have a little look. Okay, cycle identification for breakout of Asia. Have we had the inducement of the day? And what structural points were taken out after Asia has been induced? Lots of questions. We're going to give you the answers. So Obviously, before that, we could potentially trade a Frankfurt setup. Ideally, obviously, the nicest setup is always your fast and Francturious into the inducement of Asia. Gives you a nice quick trade, nice buffer for the day. Some money to play with so that you can get into these more riskier setups if you so choose. So, okay. Perfect. Let's have a little look. So, again, we understand all of this. We understand where people are getting in. We understand where the SLs are. So let's just apply this for a second and let's think. So that's our first breakout point. Agree. Majority of the SL is going to be down there at Asia low, as that's the significant structure point. Then push, pullback, push. Boom. Okay. So who got in here? Well, obviously you've got breakout plus break and retest. They got in on the breakout of this high. Retest, push higher. Perfect. Makes lots of sense. So we understand that, okay, this zone here has lots of SLs there. It's the first real structural point after we've had our channel induce high. So very likely this is going to be an SMT. In the ideal scenario, what happens with this SMT? Ideally, we get like a really nice, like, boom, boom, really sells it so that people even set their limits there. And then we just, boom, right at Frankfurt. That would be the ideal scenario. So let's have a little look. Yep, remember, breakout plus break and resistance, break and retest. SLs are right here. This is week 1 content. No reason to overcomplicate it. This is exactly what we teach in week 1. There's a reason why we tell you to focus on those 4 liquidity types. So let's have a look. Okay, wow, this is getting even nicer. So now we've got people jumping into the sells. Again, if we're going to get our reversal set up in London, we always want to bring, not always, but ideal scenario is to bring in premature sellers before the true sell happens. Now, loads of premature sellers will be brought in if this low gets taken. That's the obviously confirmation for the breakout. Trend line guys, they're all getting excited. So, okay, this looks really nice. Is this a straight limit? Probably not. Probably not. Depends. What would be the ideal scenario to fuck over everyone right here? Well, we should understand this from a mile away. And I don't remember exactly what content this is. I think it's chapter 3 or 4. I think 3. This is obviously an additional confluence for this zone. It's day open. So, what a surprise. It's not quite Frankfurt yet. So let's say no trade. Let's just stick to timing. But we understand, just in terms of price action, what should happen from here. We understand, okay, this makes a lot of sense. I understand what could happen from here. At this point here, everyone's getting excited. Sells, breakout, trend line. They're all getting really excited. So what's next on the Litiverse? Frankfurt Open, our fast and Francturious. 1 second, let me just have a sip of water. Identify whether Frankfurt itself was the inducement out of Asia, or whether we are in the middle of Asia during this time for a fast and Francturious, which could lead to a retail heaven. Okay? So, Frankfurt Open. Realistically, we're not dealing with Frankfurt Open. We're probably dealing with the fast and Francturious if we just look at the price action. If it was a Frankfurt Open trade, we'd probably be getting something like that. So we understand, okay, quite likely that we're going to be dealing with a fast and Francturious setup. Perfect. Now, we obviously don't have the midline, but we do have the day open confluence. So let's keep going. Okay, yeah, we understand. Don't rush. Target identification. Well, if we're going to be trading our fast and frank curious, so if price was to maybe come back to here, give us the mitigation, we would obviously just be taking it to Asia high. Bring our nice little, bear with me, bring our nice buffer for the day, and yeah, we can start to maybe take some more riskier setups. So, as you can see, Frankfurt just misses our mitigation. That's fine. Overall, intentions are obviously very clear. Sellers brought in, buyers taken. So we understand that is obviously our ideal scenario. Okay. Right. So now we have an inducement of Asia high. But just because we've taken this, we still need to use our brain. We're channeling upwards. We haven't broken out of the channel yet. We're bringing in buyers. And what is right round the corner? If this right here was Frankfurt, what do we have right round the corner? Of course, we have London Open. So, London Open Cup trade. Have we identified the type of movement out of Asia? We obviously have not had our vectors yet. And let's keep going. Sorry. High time frame POI. Look to the left. In this case, I don't believe we have a nice higher time frame POI. I'll go back and double check, but I'm pretty sure we don't. So, okay, if we were to, then obviously you get your refined mitigation. Maybe this is your extreme limit, maybe not. Depends on how nice the price action going into it is and how nice this zone is. Is it an inducement POI? Is it not? Should you maybe play the reaction from this zone after proper confirmations? These are all obviously things you need to think about. So, okay, again, I think we speak about this quite a lot, but you want to be careful over refining. Quite often, you just get it going from the M5. But if you do over refine, you have to accept, if you do want to always refine to the M1, nothing inherently wrong with it. You just have to accept that what might happen is you might miss some trades. So you're obviously missing some trades, sacrificing, but you're not but if you're going for the M5, you're obviously maybe sacrificing a little bit of RR if it goes to the M1. 1 second, auto break. All right, perfect. So in this scenario, we could have a possible extreme limit entry, like we spoke about. If we get a nice little build up underneath it, right into inducement mitigation at London Open, that would be like obviously your ideal extreme limit entry. Let's keep going. And then you can set your limits and relax. Realistically, in this scenario, you get your build up, inducement low, London Open. Now it does vector up, but realistically, probably not a limit that you're going to take. So there's nothing wrong with that. We don't need to suddenly start rushing. We understand. Okay, we've brought in sellers here. Trendline guys, they're all excited. We've taken out some buyers, and now we've obviously got Asia high breakout buyers getting in, pullback, another set of breakout buyers getting in. So we can see, okay, people are getting excited for the buyers, especially London Open kicks in and we just have, boom. That's obviously your vector candles, people who trade momentum and use that as a confluence, getting people in via FOMO, all types of different things that this induces. So let's see, Mona Lisa trade identification. At this point, we should be presented with trade opportunities that form in the extreme mitigation, your LET, your breaker structure, or your EDM. So you should all know what they are by now. So let's keep going. LET mitigation. Yeah, we should understand all of this. Let's get into the meaty stuff. So, boom. London Open. Cycle completed to the top side. Probably not a limit. Maybe if you take the Frankfurt trade up into it, you can risk some of the profits on that limit. maybe it's still a risky trade, but we can put like we'll do this. We'll do like a little half tick. There you go. Okay, we understand buyers are in. We've also got these equal lows here. So we understand that all of the equal low buyers that got in, as it's going higher, some of them waited for the structural confirmation. They still have their SLs here. We also know that on the higher time frame, we've got even more SLs down here somewhere. Don't know exactly where. From the higher time frame, like I don't even know what it was, like quadruple bottom, I guess. And then we understand, okay, it's London Open. We had our vectors to the high side. We gave up break of structure. We already had the fake break of structure here. This induced all of the premature sellers in with the SLs here. We took them out. We sort of built these like equal highs, gave a nice little reaction away, and now boom. Now we've obviously just had the relevant break of structure if you choose to trade such. And now we have the MM trades. So here, what you need to think about is, let's go back here. Has London Open completed its purpose? Well, we understand that if we really look at it, this is probably the minimum purpose for London Open. This inducement high should probably at least take it down to here. We built buys, brought in the fake sellers here. Not fake, they're real sellers, but obviously brought in the premature sellers there. Nice little reaction away, London Open, boom. Okay, so we understand that realistically for MM, we probably don't expect it to induce high one more time. We probably expect, in an ideal scenario, some kind of mitigation. Okay, so we understand that. First, identify our time, as well as what our prior move looks like. Is this a continuation or an additional inducement in MM? So obviously in this scenario, it is most likely going to be just an additional continuation in Magic Manipulation Minutes 1. Let's keep going. Okay, if you're looking for LO cells from an AOI and awaiting a lower time frame confirmation. Oh, that's obviously the momentum mitigation. So I don't think we haven't come into demand. Let's double check. No, so we haven't come into demand or anything like that. So no reason to be additionally careful. Even if we did, this would still be a very nice trade. And this is obviously the scenario that we're going to be looking to play. Looks pretty much exactly like what we had happen. Again, you just move this to the left a little bit. We obviously had our fake break of structure here, and one little push, pull back, push, and then that's obviously where we are now. So let's keep going. Obviously, we don't expect this because London Open came in, beautiful cycle completion to the high side, makes perfect sense. So we spoke about the London Open target, so that should all make a lot of sense. Now, the only step left is to find target areas for the London Open and MM trades. The move from London Open will tell you how strong the rest of the continuation will be, so choose wisely. Remember the higher time frame POI we looked at in the previous steps. Obviously, we did not have one. And now we need to think about areas that it can pull back from, because it's very rare that you expect just a straight up. Okay, let me draw this out because this is going to look like a little bit weird, but boom, 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 boom. And then you very rarely expect just like that right to your higher time frame target. Obviously there's going to be, we probably expect like a little bit of a pullback there, or maybe there's another like liquidity zone here and we expect like a little bit of a pullback into that, or maybe like that, and then we come into this liquidity zone and we actually expect like, okay, we fake out the buyers, stuff like this, and then our final liquidity zone, and then maybe then we go into another little build up, inducement low, boom. Anyway, but if you obviously look for and anticipate reversal areas or retracement areas, then you're not going to be so shocked when they inevitably happen. So let's keep going. Let's go through this. Okay. So perfect. Happens a little bit before MM1. This is going to be like 9:20. 9:20 UK time, so 10:20 German time. But this is obviously Mona Lisa setup. Wow, love it. Then we need to think about where our overall target would be. Minimum is going to be here, but when we remember the higher time frame, potentially it's going to be here, or wherever the higher time frame is. Maybe it's down here, but we need to think about that because we know that it's very close. That's your minimum target. Perfect. Pullback into continuation. Order flow down. These are some nice trades. If you missed this one, there's nothing stopping you from taking that one. Makes sense. We like this. We like this. Where would the ideal pullback for MM2 come from? So we're probably about an hour or so away from MM2. Ideally, we expect some type of pullback. Now, let's think about what is the ideal way to bring in more buyers. Well, ideally, if we reacted from like this SMT, which is also kind of a liquidity point in and of itself, it would make a lot of sense. You pull back, boom, and then maybe MM2 gives you the EDM into like a continuation. Yeah, that would be obviously our ideal scenario. So let's have a little look. Okay, shit happens, just misses. Obviously this price action, boom, comes up, fakes the break of structure high, would be like the ideal scenario. But anyway, it's MM2. Let's jump in and see what we see. So again, we faked the break of structure. This was obviously our let on the M1. It's not the nicest. Here, we obviously have our MM2 trade, which fakes the break of structure. Boom. Into our EDM. Into our continuation lower. Okay, perfect. Yeah, that makes good sense. I understand that. Love to see that. So now we need to be careful because now we have grabbed some liquidity. Overall, we understand, yes, our minimum target is down here, but we still can potentially expect some type of a pullback. Maybe we pull back even higher and we take out this position, right? So if it pulls back to here, realistically, you're probably not going to want like a third entry, especially after we've grabbed this liquidity. Sorry, fourth entry, especially not after we've grabbed this liquidity. So what do we understand? Okay, at this point here, showing the vectors, yeah, it's probably best to break even. That makes sense to me. Perfect. So now I'm pretty sure this was news or something like that. So now is the perfect time to remember our H1 higher time frame coming into New York trap, because obviously the ideal scenario for our daily cycle would be it continues, New York trap induces low, we get like a pullback trade to end the day, and we end the day like within the overall range. That would obviously be the ideal scenario. So remember back to this, all this stuff that we showed makes a lot of sense. So that is this line here is this line here. Okay, perfect. So what's next? Daily cycle identification. Where are we in terms of the bigger picture of the day's movement? Has the day itself been a build-up, inducement, or mitigation on the higher timeframes? Well, if we look at this, boom, we come back. So basically, we've had this type of price action, boom, and now we're currently here. So we have two scenarios. It could either be LO KO, or we could get the starter kit. Obviously, ideally, if we take this inducement, depending on the timing, we would obviously ideally prefer the starter kit with a nice little pullback back into the overall range. Be very nice. So let's keep going. Okay, yep, this is obviously like pretty much exactly what we're looking for. Again, I mean, it looked pretty much exactly like this.